if you ask me, more than the domestic investor, it's the foreign investor who will take a lot of comfort from these results. The FIIs we've been pitching to over the last 6 months were apprehensive about 2024. I think a lot of that will be abated. I've already received phone calls from FIIs who booked their tickets to India over the next couple of weeks. If you are to ask me what we should look out 2 to 3 years out, I think 2026 delimitation becomes a big thing for us, for people like us to turn our minds towards. It's relatively clear, as you said, that the BJP's hat-trick means that pretty much the entire Hindi-speaking belt is theirs. And 2026 delimitation will be the first time in 50 years India will have to sit down and figure out which part of the country gets how much Lok Sabha seats. So that will become a key variable in the political arithmetic, I suspect, over the next 12 months. But for now, elections 24 as a market variable off the table, which means FII money, I think will flow in thick and fast over the next 12 months.
Yeah, so Saurabh, even if we didn't get an outcome like this in state elections, the markets would have probably taken it in its stride, thinking that, people do vote differently for general elections. In that sense, this has been a huge positive, and we've sort of seeing this rally play out today. And do you think we will build on this rally as we go into elections next year, or we will be in consolidation mode? Because a lot of positive, now it is already looking like general election is a foregone conclusion. So why should the markets go up?
Sure. I'll tell you why for FIIs this is a big deal. We might think we are a big market, but in the context of the global FII community, India is actually a small allocation, right? So foreign investors have allocated just $0.6 trillion to India compared to $3.5 trillion to China. Now, China has been a disappointment. 10-year CAGR from China in dollar terms is 3%.
Correct.
Whereas India has generated 13-14% dollar returns, right? So what we are seeing over the last 12 months is a whole new generation of FIIs. People who have never invested in India, considering India for the first time in their careers, trying to shift their money from China to India. Even if they shift 1/6 of their China allocation, they'll pretty much double the amount of FII money in India. For the new generation FII who's new to India, they needed political stability because that's what they were basically backing in China. This election, the assembly election results, gives them the political stability, and therefore I think for a new generation of FIIs, this is their India journey beginning, and that's why I reckon yesterday's results trigger a major upsurge in FII inflows into India over the next 12 months.
Sure. So I have a couple of questions. One is, how do you see this China story playing out? Because even yesterday, I saw an article in FT talking about, Chinese real estate. Again, there are defaults and stuff like that. So is that a big worry as we go into next year? Will China continue to be a problem? And I'm asking this question in the context of the fact that in the past 1 year, there has been, in fact, in the past 2-3 years, there has been a lot of money that has flowed out of emerging market passive funds. And by default, when money moves out of emerging market passive funds, money also moves out of India. So when you weigh the two things, the new investors who are looking at India solely as an investment destination versus the large amount of passive outflows from emerging market funds, how do you weigh these two things and how will they reflect in our markets? So first the China risk, second the flow risk.
A beautifully phrased question. So let's start with the China risk. Look, I think we read much the same FT articles that you are reading, Mahalakshmi. So there, the fact that they've got Evergrande and Country Garden, and from what I understand, many such developers, each of whom have $100 billion of debt on their balance sheets and apparently no such ability to finance this massive mountains of debt. 30% of their banking system assets are real estate. SME shutdowns are running at record levels. Youth unemployment is high. Their industrial economy seems to be either barely growing or some quarters even shrinking. And FDI inflows are zero in China, right? So that's the sort of the publicly available data suggests a pretty dismal picture. The only extra bit that I have is when we meet the FIIs, they typically will have a Chinese national in their ranks as well. Because as we discussed, for FIIs, China has been a massive allocation in the last 10 years. So when I ask these Chinese nationals in the United States or Britain, they say back home there is nothing to do. There's no jobs. The economy is completely hammered, and they say the reality is actually even worse than what we are reading in the FT. So the macro picture in China suggests that a 20-year story built on pumping in taxpayers' money into bridges and flyovers and flats seems to have run out of gas. Those bridges seem to have very little traffic. The airports friends who are visiting us saying the airports are empty, and effectively you're pumped in capex into white elephants, and hence the economy has ground to a halt. Now, what does that mean from a flows perspective? You're absolutely right. If you see India over the last 12 months, our macro has been pretty good, right? But FII inflows over the last 12 months will be barely $5-6 billion, because as you're saying, the index funds are pulling it out, the active FII is putting it in, and it cancels out to a pretty modest $5-6 billion over the last 12 months. What we are seeing is new MSCI EM indices being created without China in it, and with a very heavy allocation to India. So this new generation index fund will become, I think, for the US or Western retail investor, this will become their preferred medium to come into India. Basically MSCI EM ex China with I think a 35 or 40% allocation to India. That will become a pro-India pusher of money. And over and above that, as I was saying, the actual the pension fund or the trust fund or the endowment, those guys are booking their India tickets, and they will come in and also pump money actively into India.